Hello and welcome to the new video. In this video, we will discuss the sample questions that can be asked in the interview by the interviewer, especially in the financial institutions for the position of operational risk manager. So, the number one question that can be asked is the different categories of risk. So, you must know what are different categories of risk. So, categories and types are basically used interchangeably, so you have to answer like there are various types of risks that are faced by the financial institutions or the organization, including financial risk, operational risk, compliance risk, legal risks, reputational risk, credit risk, liquidity risk, etc. So these are the broader categories of risk that are faced by the financial institutions, and you need to know a little bit more about these categories. I have already uploaded a video where I have discussed these categories of risk, so you can watch that video. And please also subscribe this channel and share the video with your friends and circle who are working or pursuing career in the risk management domain. So the number two question that can be asked is what is operational risk? Because you are applying for the operational risk management post, so you need to answer appropriately and accurately what is operational risk. So the model definition of the operational risk is the risk of loss resulting from failed internal processes, systems, people, and external events. And what are the external events? External events might be the earthquake, floods, fire, and if these events occur, so you can imagine what would happen if the office location is in the area where the fire or flood or earthquake hit. So the entire operations can be disrupted, and we are discussing the operational risk. So these events pose significant types of risk for the organization. Internal processes means different processes like sales process, purchase process, fixed assets purchase process, income recognition process, etc. So if these processes are not appropriately defined, then the operations can be disrupted. Similarly, if the systems like software, or you can say if any technology system is not appropriately deployed or used, or if the system fails, then the operations will be disrupted. And similarly, the people means the human resource of the organization. If the people of the organization are corrupt, or if the people are frequently resigning from the job, then this is an alarming situation for any organization, and this is linked to the operational risk as well. So this is the model definition of operational risk. Now the question number three would be what is the primary role of an operational risk manager? So if you are applying for the position of operational risk manager, then you need to know what operational risk manager primarily do or in the organization, like in the banking industry. So the operational risk manager is primarily responsible to ensure that operational risk management related regulatory requirements are complied with. When we talk about the banks, the state bank or the central bank issues different regulatory requirements around the risk management domain, especially around the operational risk category. So the operational risk manager must know what are those regulatory requirements, and he is responsible to ensure that the provisions of the regulations are complied with by the organization or institution. So he performs reviews of internal policies and procedures to identify the operational risks. He ensures that the policies and procedures cover the requirements laid down in the regulatory requirements around the operational risk management. And further, he performs operational risk assessments. For this purpose, he coordinates with different functions and departmental stakeholders or process owners to know what are the operational risks in their specific areas or domain. And he also coordinates with stakeholders to identify and assess the significance and likelihood of operational risk. Significance means what would be the financial impact if the operational risk actually occurs. and the likelihood means the chances of occurrence of that particular operational risk. So, operational risk manager is responsible to identify and assess the significance and likelihood of operational risk. And for this purpose, he uses different tools and systems like operational risk assessment tool, or you can say the risk and control self assessment, or RCSA. RCSA is basically a tool that enables process owner to jot down the particular operational risks and the controls around those risks. Further, the RCSA enables the identification and assessment of significance and likelihood of the operational risk that we discussed earlier. So the RCSA tool is filled by the relevant departments and process owners, and the operational risk manager basically ensures that the RCSA is used and filled by the departments and process owners for self-assessment purposes. Further, the operational risk manager develops and maintains the key risk indicators, or KRIs, for different departments and functions. And these KRIs are identified based on the risk assessment performed earlier through the RCSA tool. The purpose of maintaining the key risk indicators is to identify the significant type of key risk, the medium categories of key risk, and the low category of key risk. So, the operational risk manager keeps a regular eye on the significant types of key risk indicators and performs the periodic operational risk management reviews around those risks to ensure that such risks are not actually occurred. Operational risk manager also ensures that operational loss events, if already occurred in the organization, like for example, due to the system failure, the cyber attack is occurred in the financial institution or the bank, then the operational risk manager would be identifying the cyber attack incident, and he will ensure that the incident is appropriately reported and escalated to the relevant departments like the information system department or cybersecurity department of the organization. Further, he also coordinates and collaborates with different stakeholders to investigate the reasons or the root causes of the cyber attack. So he will then uncover the root causes which would be most likely related to the weaknesses of internal systems, or you can say the weak cybersecurity controls. Similarly, if the fraud is occurred in the organization or the financial institution where the operational risk manager is working, then the root cause of the fraud will be identified by the operational risk, because occurrence of fraud is also to be classified in the operational risk category, because if the fraud occurs in the organization, so it means that there are weak internal processes and systems, as we discussed in the definition of operational risk, that the processes failure is the cause of operational risk. So if the fraud is occurred, then it can relate to the weak internal processes and systems. And further, operational risk manager recommends appropriate controls to the process owners to avoid operational loss events. I would request you to please subscribe this channel and share the videos with your friends. I have already uploaded different operational risk management related videos earlier. You can watch the playlist, and thank you for watching and giving your time. Thank you. See you later in the next video.